Good morning, friends. Nalinakshi Swami here. Yesterday was an expiry day. What happened in Nifty? How you could have traded? Actually, if you see the structure, this was in the continuous downtrend. Continuous downtrend. I'll start plotting the lows and high. It was a pullback, and then price came down and pulled back. And this was manipulation. This was manipulation, and it came down. It started trading in a range. On 11th, it totally traded in a range, ending with equal lows. These are the area. This is the money spot area. Money spot. When there is equal lows, there is a high possibility of manipulation. So next day, I'll take out again this. Next day, it was gap down and consolidation and trapping, and then it went up. It made an equal high. Mind it, equal high and closed below here. In between, it closed here. And yesterday, what happened is it gapped up. This is the area. This is the area from where it had come down, and it gapped up to this area. When it gapped up to this area, the structure is still down, actually, still down. Immediately, it was a big green candle. You can see it is a 15-minute candle, big green candle, and reacted at the 1 minute. I'll just take out. Reacted exactly at this level. It penetrated into that level and it started moving down. So the still same structure. You can see the same structure over here. It went up. It appears like an head and shoulder pattern. It came down and then it ended at the equal low. See, Indian markets, most of the time you will see gap downs and gap ups. Because of these holidays, actually, they take it as an advantage and use it to manipulate the market. So now what it can do is it can gap down. Where is the level actually? There is one more level in the market. Sorry. This is one level where manipulation has taken place. This is a gap up. What it can do is it can gap down to this level, 17,383, or otherwise it can go up to 17,336. So it can come down here, and then it may start reacting from that zone. So when you can see reversal, so we try a trend line. So if it starts coming out of this region and start trading above this 17,682, then you can consider a reversal. And if it starts moving above this level which is 17,570, that is break of structure. And you can trade accordingly. So what they are doing is, this was the area, liquidity area. 1 minute. This was the liquidity, is nothing but buy and sellers have been engaged. And later, there was a huge imbalance. This huge imbalance was corrected in the manner of buyers and sellers, and it has been distributed between the buyers and sellers. So both buyers and sellers have been engaged, trapping all those people who goes wrong, whether it's a buyer or a seller, and price has come down and it has come to this area. This is the area, crucial area from where Nifty has taken reversal. Reversal, why reversal? Because this was the liquidity counter while coming down. This was the huge liquidity counter coming down, and price gap down from that area. You can see price gap down from that area like this, and it came down. It started reversing. So this is one counter and that is a one counter. This counter has been, because this counter, the big player, took out this area. This was the resistance and went up, trapped actually. It went up. It could not conquer this level. This level could not be, this order block was not able to, because this is the seller's area, could not counter it. So now they have not hit this or gone past this. They have come back. The price has come back, Nifty has come back and hitting this area, and these are the two blocks. These are the two liquidity blocks. So they can penetrate into this. They can do reversal because this is the level actually. You can see, I'll remove the drawings. I'll go to 1 hour chart so that you can see it properly. I'll reset it. See, I'm zoom it out. See, this is the area. If you see, this was the equal highs. It has been trapped. And now price had gap down from this area. And it has been filled. And here price had gapped up and it has been filled already. So mitigated. Equal lows. You can see equal lows over here. Equal lows over here. So there is money in this area. Money. Why money? Because whoever gone long, they have got their stop losses. The positional traders, they have got stop losses over here. What the market players will do, they will go and grab the liquidity one by one. Not immediately they will penetrate and they will create discount and make you people to buy actually. That is not their intention. So if I'll zoom it out. See, this is one counter. You can see equal lows. Beneath this counter, there is huge liquidity. So money is there. Because it has not been tested. This order, this area has not been tested. Okay. So it can penetrate and come up to this level also. Price Nifty can come down and connect to this level too. This is one level, 17,231, or they can stop it over here around 17,300 and 1 minute. Exactly, I'll tell. Sorry. It can come down to 17,346. 46. These are the levels. It can react If it cannot go past this, then it is not completed actually. They want liquidity. They will grab the liquidity. They may push Nifty to 17,106 also, and then reversal may come. We do not know. This is one counter. Huge buyers and sellers have been engaged and price has been gone up. So they are coming back to grab it. Probably there may be some pending orders over here. They might have kept pending orders over here or in this area. So how you could have traded yesterday? Yesterday you can trade very well if you know the market structure. Let me go back. You understood the market structure. What has happened? What you can do is, I'll go to 15 minutes time frame. And usually how I take trade is, I mark the everyday, see, I mark the structure, whole structure like this, and I mark the everyday blocks. Okay, this was the block of day before yesterday. And then this was another block. So it becomes easy for you to take trade. Why? Because it is in downtrend and this is the manipulation area. This is the manipulation area. This area is stop loss hunting. Even this area is stop loss hunting. This is stop loss hunting area. This area is stop loss hunting area. So if the price is, say, see the structure, same structure. They are following the same structure. Coming, it has come down, made an high and closed at the bottom here. Then when market is gapping up, either if it has to become positive, it has to go above this level, 17,776. If it is going to reverse or if it is going to give any, and another level, if it has to react, this is the area from where price has come down. This is the area price has gapped down, and so gap levels will act as resistance and support. So you mark the, in advance, you mark this level. This is the level you mark it. If you mark it and if you have everything in your hand, you can go, you can anticipate what is happening. See, it went into that area with a big green candle. You can see big green candle, that is a 15-minute candle. Let me change the time frame and I'll show it to you. See, three white soldiers actually. So 3 white soldiers. And you will think it will consolidate and it may take up. See, immediate reaction was there was a supply coming over here and they trapped. See the reaction candle, how it is. This is the candle trapped all the buyers who had gone long. They trapped all the buyers closed here. When trapping happens, you should always wait for. You should always wait for another candle, green candle, to see whether this trapping surpasses this trapping, whether the price can go above this level. And why this reaction? This reaction was the gap area. This was the gap area. That's why it started reacting. And the next candle itself, the next candle itself showed change of character, CH. CH was CH. So it confirmed everything that it is not going to go on. So keeping the stop loss of this area better, 17,662, it started coming down. Coming down, it started reacting in this area. Which area? This is the gap area. From where? So you have to mark the gap areas. I'll change the color to red. Okay. This was a gap up and there gap down. So these are the areas it started reacting. So it went sideways. So since yesterday was expiry day, it went sideways. It took nearly from 10 to 11:30. It went sideways. It could not go again. People in the media also came up and everybody thought it will take sideways and it will again make one more attempt to go up. They didn't do that. This was not the play. This was not the play. The price could not, the intention was not to go up. It continued down. It continued down and this was the another reaction area, another reaction block. Why? Because they are trapped over this area, see, low, and this was the trap. Stop loss hunting was there. Actually, big institutions are playing in the Indian market like this only. Yeah, because you will utilize the holidays to gap up and gap down. That is the problem with we cannot trade properly for the retailers with little money cannot trade properly because we cannot engage ourselves. We cannot hold the position. Can you see the position yesterday? Yeah, it on 12th, actually they tracked and they pushed it up and they closed it down. So nobody will have the courage to hold the position. Retailers will not have the courage to hold the position. Next day it was a gap up. Gap up, they can play any way. Either they can come down straight away. They could have come down straight away, right? They could have come down straight away like this. But what the play is, they gapped up and tried to hit into the liquidity area, gap down, and they reversed and they closed at this level because holidays. Today is a holiday and tomorrow is holiday. So the retailers will not have the courage to hold the position, hold short or anything. It can trade SGX, Nifty can trade, go down and trade back up. And in the real market Monday, it may be above this level. When that thing above happens means in this area, this play, where they wanted to go up. This is an equal, this is the liquidity area. See, lot of stop losses are there. Here, stop loss is there. Stop loss is there. So this is a money area. Money area, see, when it gaps down and in the morning, Monday morning, if it opens here, you will think it is going to go up. They are creating an illusion like that. So people will start because this void is there. Void is there because of the holidays, they may gap up to this level. There is a high chance of gapping up to 17,590 and creating an illusion, as if market is going up. Again, they may push it back. This is an advantage for the Indian market. This is how you can trade. What you could have done is, if you are to be an option trader, if you would have known these levels, you could have either sold call option or you could have taken put option. 17,700 put option. It was trading around 72 rupees and appreciated to 264 rupees. So selling call option, you need a lot of money. But in the same amount of money, at least minimum you can buy 400 lots of 400 to 500 lots of one counter, I mean Nifty, and then you can play for that. So it would have around 68,000 you could have captured in this. So try to understand the structure and play. So when the reversal will come, it has to start, price has to conquer this area, 17,766. Until unless in this area, the play will be up and down. So they may start buying in this area. Or they may push it, or they may not push it down to this area. There is a lot of money. You can see there is no price action over here. Can you see? In this area, it is empty. Even in the chart itself, you can make out. So all the people who have gone long, their stop losses are there. Just slight push to this level will fetch them a lot of money, right? And there is little money over here, stop loss. Wherever the space is there, there are money, stop losses are there. So they will grab that liquidity and they will play in an opposite direction, creating an illusion as if it is going to go up. So that's how you can trade very simply by seeing the structures, by following the market, what is happening in the market. And whenever you see an imbalance like this, definitely these people who have nothing but these people have captured all the stop loss hunting. These are the stop loss hunting. They have done it and they will not go into loss. They will start distributing themselves, distributing to retailers, and again they will come back to their pending orders where probably they might be hiding over here. This is one level where the money is there, gapped up. See, they have trapped it. From here, it has been gapping up. So you have to always, this is the area where trapping has taken place. From here, it has come down and it has gone up. Price has come down, sorry. Price has trapped these sellers and again gone back and then it has gone past this level. So these sellers have been trapped. First, these sellers have been trapped and it has gone down. So these sellers stop losses are here beneath this. Both the sellers stop losses are beneath Lot of liquidity is there in this area. In this area. Right? Double top. Liquidity is there. And so it is easy for them to liquidate. Okay, friends. Thank you very much. Nalinakshi Swami signing off.